JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 5th of April 2021. So yep, welcome everyone. Welcome to this Monday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff basically. But before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course, our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top, guys. So now then, jumping into the charts, the first one I want to pick up here is Nikkei 225. So, of course, the markets are closed today due to Easter Monday, but certain other instruments are still available to trade. So here, Nikkei, I mean, was available. Of course, it's closed now, but we had a good run to the upside, and yeah, Nikkei kind of pushed closer to this downside line right here, taken from the high of the 16th of February, and yep, for now, basically, this is exactly what I was. Oh, well, not ex well, this is what I was targeting previously when I was covering Nikkei. My next target was this downside line, and then I said what I said then was that if we do see a strong, good move towards that downside line, then we'll take it from there. Because again, I don't want this, I mean, to end up being maybe something of a maybe potential triangle here. I mean, don't get me wrong, it's not an ideal one, but nevertheless, for now, yes, we are leaning a little bit more towards the upside here, but again, I would prefer to wait for a push above this 30,300 level here and a break of this downside line. All that, yes, of course, could do the trick here for more buyers. So keep that in mind, guys. Now, jumping into DXY here, the dollar index. Yep, it's pushing higher. It's trying to recover some of these losses that we saw here made in the end of last week. So in a way, everything's still kind of looking on the, everything's still on the positive side in a way, because we are still trading above all of these lines here, the downside one and the upside one, and also above the 200-day EMA. So all this, yep, could still be seen as a nice positive thing here for DXY. Also, keep your eyes on the data today. Although the most of the markets are closed, we still have the US ISM non-manufacturing PMI figures coming out later today, and so far the figure is expected to increase, and going from 55.3 to 58.5. So yep, quite a decent increase here. And if we get a number which is going to be even more than the forecast, then yes, of course, this could play out positively for the US dollar. So keep that in mind. For now, basically, we're keeping an eye also on this upside line. As I said before, this upside line, it needs to remain intact in order for us to kind of continue targeting higher levels. But if the price suddenly falls here below the 92.50 territory, somewhere around here, marked by the high of the 9th of March, then of course, yes, lower levels could be met, guys. Now, jumping into gold, and gold is bit of on a roller coaster ride here. So basically after finding, let me get rid of this downside line, no longer needed. After finding good support near the 1677 territory and near this upside support line taken from the low of the 20th of May of 2019, the commodity rushed back to the upside, and yep, we're now kind of seeing that it's kind of oscillating around that 21-day EMA, although it's slightly below it right now. Still, it's currently above that 1719 level marked by the inside swing low of the 18th of March. So in a way, there's still a decent chance for this commodity to reverse and push higher. However, what I would prefer here to see, in order to get a little bit more, let's say, comfortable with the upside in the near term, because let's not forget that the upside in the near term could still be seen as a temporary correction. So, because we're kind of still trading below these downside lines here. Now, in order, like I said, to get a little bit more excited with the upside, then yes, a push above the 1764-65 territory, somewhere around here, could do the trick here for more buyers, so keep that in mind. WTI Oil, very quickly on this one, still watching this one, observing it carefully and waiting for WTI Oil to kind of make a move here, because it's currently stuck below this downside line taken from the high of the 8th of March and above this upside support line taken from the low of the 20th of April of last year. So let's see which way this is going to break out to. And yep, hopefully guys, we'll see a nice push here to the upside. So just bear with me one moment. I hope I'm having connection here, guys. I mean, this is yep, my it seems that my MT4 and MT5 has kind of gone down here a little bit, but anyway, let's resume. So yep, guys, I mean, for now, the big problem here, I would say, is the waiting game, of course. But if we do wait, and then I mean, if the commodity does pop out here, then it might be a good decent move. So let's wait for that one, guys. Let's not rush into anything. So for the upside, what I'm looking at here is the 62 territory. I need to see a nice good strong pop above it. But yeah, if it instead it decides to break the upside line, well, I would prefer to wait maybe for a drop below the 57.2830 territory, somewhere around here, in order to go for lower areas, guys. So keep that in mind. Now jumping into Bitcoin very quickly here. So Bitcoin kind of still struggling to move higher, but on the other hand continues to trade above the upper side of this falling channel, which kind of exited through the upper bound of it. And also at the same time, the rate here is trading above the 21-day EMA right here, shown as the yellow line. So there is still positivity in all this. However, given this kind of price structure right now, I would actually prefer to maybe wait for a push above last week's high here near the 60,190 zone. This way the crypto would confirm a forthcoming higher high, and yep, more buyers could join in then. So let's keep an eye on that one. For the downside, maybe I would prefer actually to see a drop somewhere below the 54,000 mark here, and then yes, we could go for some lower areas, for a larger correction to the downside, because again, we are still trading above this upside line. So in a way, everything's kind of still on the positive side overall. But from the short-term perspective, yes, as I said, a drop below the 54 territory here, 54,000, could maybe lead this crypto to a bit of a larger correction here to the downside. Ripple is popping nicely to the upside here, and look at this beautiful move here. And last week, when I covered Ripple, I said to you guys, keep your eyes on the 0.5810 territory, because if that gets cleared, then yes, we could go for, and if we see the daily candle staying above this area, then yes, we could go for some higher levels. And well, I mean, you can see that yes, although we had a the daily candle staying above this area, we did get a bit of a retracement. However, the crypto found good support near this area, near that breakout area. But then, yep, reversed nicely. So, yep, the bulls kind of picked up on all this, and everything worked out nicely. So we managed to reach our target. Our target was around this area here between the 0.6436 and the 0.6562 territories levels. We managed to overshoot that, and as you can see now, it seems that the crypto is heading towards that 0.7574 mark, which is the highest point of February. Now, of course, we'll be very careful here for now. This is, like I said, this is my next target, the 0.7574 mark, the highest point of February, or if that gets overshot, then of course the level, the next one that I'm keeping an eye on is the 0.78 level, marked by the highest point of November of last year. And then we'll take it from there, because for now, I mean, yes, everything's looking nice and positive here, but let's be a little bit on the careful side. Now, jumping into AUDCAD here very quickly. So, I've talked about this pair last week, and basically just a quick refresh on what's happening here. So basically, I said previously that if the rate continues to trade below this downside line, there is a chance, of course, for this one to move lower. However, I would still prefer to see a drop below this 0.9535 territory right here. Because as you can see, we did get a drop previously, but we didn't really get that daily candle staying below it. So if we get this time a drop below it, then yes, of course, lower levels could be met. However, you can see today we're breaking this downside line, although it was previously even seen as a sensitive one. But we are now, yep, breaking it. And however, we're struggling with the 200-day EMA. So probably don't rush into anything yet, guys. Again, yes, it looks quite interesting. However, if the 200-day EMA continues to provide resistance, then, well, I mean, maybe we'll have a nice move back down. However, for me, as I said, in order to go for some lower areas, I still need to see a drop below this hurdle, below this area right here, the 0.9535 zone, and then we'll take it from there. Let me just get rid of this downside line, no longer needed. For the upside, I will keep an eye on the 0.9644 mark right here, which is the high of last week. A nice good push above it, yep, could attract more buyers. USDCAD here, pushing nicely to the upsides, slowly, of course, not as probably as much as we would like it to go, but yep, still okay, still looking good here. And yeah, I mean, let's see if the pair can stay above this 1.2590 territory. If it can, then yes, we could go for that 1.2738 zone or even higher. Around here, we could test the 100-day EMA. We could see maybe the pair stalling for a little bit, but yeah, for now, guys, I mean, it's we're leaning a little bit more towards the upside. However, as I said, this kind of stronger push above this 1.2590 territory is required. And although we already had one today, as you can see, the bears managed to drag it back down below it, and now we're currently stalling near this area. So that's why maybe this area, this level is something to be monitored. By us, of course. So yeah, keep your eyes on this, guys. It could be interesting, but for the downside, of course, a drop back below this downside line, a drop below the 1.2505 territory here would be needed. Now, quick update on the US dollar against the Russian ruble. This is what I've mentioned on Friday, and basically these I like to look at these pairs sometimes because they do present themselves with nice opportunities. And yep, I mean, you can see clearly why. I mean, we're currently near the upper side of this little range where the pair is stuck at. And yep, I said to you last week that if we get a break above this, again, a push above the 76.50 territories and or the 76.67 mark, and we get the daily candle staying above that, then yes, of course, higher levels could be met. But at the moment, you can see that it's kind of still flirting with this key resistance area. So let's wait, guys, a little bit. Let's wait. And if we do get eventually that daily candle staying above this area, then yes, higher levels could be met. USDCHF, very quickly on this. So this one's interesting. USDCHF is kind of declining today a little bit. However, it's in the still in the positive zone because it kind of opened up here with a little bit of a gap. So okay, let's keep an eye on that. Of course, we did see the gap getting filled already. Now we're, to be honest, the pair is slightly in limbo, although it is still trading above the subside support line drawn from the low of the 16th of February. Nevertheless, we would like to see maybe a push above the 0.9468 territory somewhere around here, because that's marked by the high of the 16th of July of 2020. Slightly above that, we do have the 0.9494 level, which is the highest point of July of 2020. But if that gets cleared, of course, higher levels could be met. We could then start aiming for this little area right here, the highest point of June of 2020, and that's roughly around the 0.9650 territory. But again, a clear break through this this area right here is required. GBPJPY. So of course, looking at the overall picture here, I mean, you can see that, yes, the pair kind of since reversing nicely here to the upside in mid-March in 2020 when we had that strong sell-off in the market. Since then, kind of the pair drifted nicely to the upside here. And all after a year, let me just quickly grab one of the tools here. Let me just one moment, guys, please bear with me. Where is that tool? Price range, there we go. So basically from the low here in March, and after kind of a year, the pair kind of gained around 23-24% here, so approximately, it depends where we're going to draw it here, but roughly 23%. So it's a decent up move here on GBPJPY, and yeah, I mean, going from the area from roughly around the 124 zone and now kind of hitting levels above the 152, slightly above the 152. So yeah, that's a kind of good result here. But again, of course, eventually this will have to correct at some point to the downside. Not saying that this would be a reversal, but a bit of a corrective move to the downside could be possible. However, looking at this picture right now, we cannot really get kind of comfortable with that idea yet, because we are still trading above some of these upside lines, and even forget about even the upside lines. We're kind of stuck here still above the highest point of March. Oh, sorry, not the highest point of March. That's the high of this peak here, the 18th of March. There we go. So we're still kind of, and that level is around the 152.55 zone, I think. Let me just zoom in here a little bit, guys. Yeah, so something like that, 152.55, so approximately around there. So we're still even above that. And what I can say here is that if it continues to trade above this area, then yes, we could see a nice reversal here back to the upside. But if by any chance the pair drops below this and stays below this, now this is where it could become a little bit more interesting for more sellers, and we could see this this kind of selling activity here getting increasing and maybe pushing towards this upside support line drawn from the low of the 21st of December. So keep that in mind, guys. So for now, all eyes are going to be on this little hurdle right here, somewhere around the 152.55 level. And finally, EURUSD. So the idea here is still valid. What I've mentioned here is that we might see a nice retracement here back up, maybe a test of the area near this downside line, taken from the high of the 25th of February, and yep, then another slide could be possible. So for now, basically, I'm still sticking to that idea as long as this downside line remains intact. And yeah, as you can you can see clearly why. I mean, there is still the pair is moving lower. Did open up with a gap today, got filled, and yep, drifted back down. So, but if you're not really comfortable with the downside here and you want something a little bit more reassuring, then of course wait for a drop below the 1.1704 territory here, which is the lowest point of March, and this way a break below this area would confirm a forthcoming lower low, and yep, further declines could be possible. For the upside, I need to see not only a break of this this downside line, but also a push above the 1.1834 territory right here, which also coincides with the 200-day EMA, and then we'll take it from there, guys. So that's it for this session. I hope you found it useful, guys. Thank you very much for joining in and watching this one till the end. I really appreciate your time. If you want to join me later on, my trader's tea time, as always, 12:30 GMT time. For now, guys, have a wonderful trading day. If you're trading, of course. If you're not, then just have a nice relaxing day. And I'll see you later on at my trader's tea time, 12:30 GMT. Thank you very much, and bye bye.